Next one up here, PayPal is back over 60. Is this for real or fake out? And what's going on here, okay? So first thing is, back over 60. So closed at 60.16 here today. Now, fifth time's a charm. Isn't that a saying? No, I think it's third time's a charm. But for now, it's fifth time's a charm. Here's the deal, okay? Right here, PayPal went under 60, bounced back, thought, okay, we're never going to see that again. Then it went below 60 again, bounced back, went below, way below, and it hit the lows back in October of 2023, right? Then we had a big bounce back over 60, and then back below 60 again. Then back over 60, and then obviously last month or this month, back under 60 again, and now finally for the fifth time in the past year, we're back over 60 again. So maybe it's fifth time's a charm. Now, in all seriousness here, if you look, this is a 3-month chart of the stock. It's clear as day there's stability in the stock now at this point in time, and the stock has stopped making lower lows. And that's a big moment. You remember, PayPal's a stock that basically was in free fall for about 3 years. Free fall for about 3 years. PayPal is no longer in free fall. It's now, over the past 3 months, really formed a stable base, and it stopped making those lower lows. And so I think that is something that I would count as very positive for this company's stock price in general. Now, there's other big news that came out. Big steal here today. Mr. Seely, okay? Geoff Seely brings 25 years of marketing experience. What happened here? Geoff, am I pronouncing that right? Geoff Seely has been appointed the new Chief Marketing Officer, CMO of PayPal Holdings. He brings with him over 25 years of experience in global brand, digital, and performance marketing. Seely previously served as a global chief marketing officer and communication officer at Cash App and Afterpay. In his new role at PayPal, he will be responsible for overseeing the global marketing team across PayPal's family of brands, which include Venmo. His primary focus will be on ensuring the value propositions of PayPal and Venmo are clear, compelling, and simple for customers. So, this is a huge steal. And I mean a huge steal for the company. What's the one app? If you look at the United States finance category, what's the one app that consistently is most downloaded over PayPal and over Venmo? If you've paid attention to stuff like this over the past several years, its name is Cash App. Cash App is the one app that in the finance category on iOS beats out PayPal and Venmo on a daily basis, okay? So clearly, Cash App has a marketing angle that is better than PayPal and better than Venmo. Okay, I have to admit that. If you're going to beat PayPal and Venmo day in and day out for most downloaded, you have something you're doing right on the marketing front. I do not believe Cash App in general is a better product than PayPal, Venmo, because for many use cases, I think PayPal and Venmo are superior. But marketing matters significantly in any business, right? And clearly, this gentleman was doing a heck of a job over there at Square. Clearly, you don't get that. I mean, you could go on pretty much any day and check top most downloaded finance apps on iOS. And I've never seen it where it hasn't been, ever. Every single day, Cash App, Cash App, Cash App. So, the moral of the story is they knew their marketing over there. And so for Alex Chriss to steal this gentleman away, I think is substantial. Why would a gentleman like that leave Square and come over to a company like PayPal? You got to think these things, right? Clearly, Alex Chriss is onto some big stuff. And if Alex Chriss, at the end of the day, what do I always tell you guys about a CEO? As a CEO, your job is not running a company. Your job is being a salesman. What do I mean by that? You're a salesman as a CEO. Your job is attracting all the talent. Now, how do you attract all the talent? Well, it's not just money and compensation. It's sales. It's getting people to believe in the vision of where you're taking this company, where this is going to help their career grow, right? Whether that's inside your organization or to the next organization. Maybe a guy like this does a great job, and the next thing you know, he's a CEO of another company, right? It can be through compensation in terms of, telling somebody about what type of growth you guys can potentially have, right? And understand the implications of, let's say, share-based compensation, SBC, for that individual. So that can matter significantly. So if you look at this across the board, you're a salesman. And then you're obviously putting all these people in place to really run the organization, because you as a CEO, you're not really running the organization. It's all these individuals that are in the head of all these branches that are really running the company at the end of the day. You're just kind of a figurehead there, putting all the pieces together, kind of like a puppet master, I guess you can say, right? It's sales. And so clearly Alex Triss, he is doing a pretty good job on the sales front, at least of attracting. This isn't the only big name executive he's stolen away from somebody recently. He's stolen several others. So maybe Alex Triss has not sold Wall Street yet, but clearly he can sell when it comes to big executives, and he clearly has a lot of respect and reputation when it comes to big name executives of other companies. So overall, good. I love that. Now, for PayPal stock, my opinion is, this is where I see the stock over the next couple of years. I think PayPal's on its run to 200 over the next couple of years. I do not think it's going to be a straight line to get there. I think there's going to be a lot of ups, a lot of downs. But at the end of the day, I think we're going to 200. That's my opinion on this. Maybe I'm wrong, but that's my vision for where PayPal stock goes over the next several years. And there's going to be a whole lot more ups than downs. We'll see. As I said a million times with the stock, I could be wrong. Maybe I'm wrong. Maybe it never comes to fruition. But I think in the end I'll be right in regards to PayPal, and I think the stock will eventually be a $200+ stock again, and I think it's coming over the next couple of years here. So we'll see. The good news is I don't even need it to go to 200. If it goes to 100, 120, I'm already, with my cost basis on this baby, I'm looking really flipping flapjack and good. Okay, so that's what's going on there. Alrighty, so let's start getting into this. Okay, first position up here, the biggest big dog of them all, is Meta stock. Now, in regards to Meta stock, something very exciting here is they just started paying their dividend. So I'm going to be receiving, I think this week, I'm going to get 50 cents for every share of Meta stock I own, which means I'm going to start receiving over $900 a month in dividends from holding Meta shares every 3 months, which is pretty darn exciting, because I was kind of thinking about this a little deeper, right? And they just started paying this dividend, so they should up it a ton over the next 5 to 10 years. And I was thinking about this because I have a couple of rental properties, right? Those rental properties, I probably profit off them about $700 a month each, somewhere around there roughly, right? And I was thinking about this Meta dividend, and I'm like, I'm already going to be making $300 plus a month from this Meta dividend. But the thing with Meta is it's all about the appreciation over time, right? And obviously, Meta stock has way better appreciation than something like real estate, obviously, right? As a company, it grows their business bigger and bigger. So instead of waiting around for your 3 or 5 or 7%, in real estate, it's like Meta's just a whole different animal. So I was like, that's pretty darn exciting. And it's just like, I can see that eventually it's going to be $500 a month I'm going to be making from this dividend, $700, and so on and so forth. So pretty exciting there. Tesla is the second stock up here of the bunch. Now, let me show you something very important in regards to Tesla. You want to see this? Check this out. Okay, so this is original shares of Tesla I bought in the public account here, at least that I still have, May 3rd, 2019, right? Talk about long-term investing, right? Holding these stocks for years and years and years, and there's going to be ups and downs. There's going to be all arounds. It's going to be a roller coaster ride. But at the end of the day, I just stay focused on the long term when it comes to this, right? Elf on the shelf, third biggest position up in the portfolio, $185,000 in this stock, 1,000 shares. Here, in regards to Elf on the shelf, those shares I bought February 27th, 2019, right? And so the important thing to remember is, I was talking about, real estate earlier and things like that. Let time do the work for you. You look at these positions, what do they all have in common? Time's had to play out here. We've let time work for us. And that's the biggest advantage for you as either a stock market investor or a real estate investor. Let time do the work for you. So many people are so worried about trying to, get in and out, and I'm going to time it perfectly, and, I'm going to buy at the perfect time, and those sorts of things. Like, that's great if you can, every once in a while get lucky and you get it at the perfect time, right? But most of the time, just let the time do the work for you. You'd be fascinated by just letting time play out, how much that can help you overall. Amazon's the fourth biggest position up here in the portfolio, $184,000 on this one. So far, we're up $71,000, up 63%. And guess what? In regards to Amazon, time's starting to pay off, right? The original shares I have in the public count here, those were acquired April 21st, 2022. And so time's paying off, right? And I've bought Amazon, so many times over the years. And the most recent shares I got was November 17th, 2023. I got those shares there, right? But time is playing out here. So many people get so impatient with stocks. They don't let the time play out. They think, if they hold a stock for 6 months and it doesn't go up and it went down, like, oh my gosh, I'm ruined. I'm horrible at this. And it's like, dude, let time play out. Time is on your side as an investor, which one of the reasons it's, pays to get invested younger, right? PayPal. So PayPal. A lot of people frustrated with PayPal stock, and I'm like, dude, most of these people that own PayPal stock, they haven't even let time play out here, right? In my opinion, time's gonna pay off in regards to PayPal here. The oldest shares I have in the public account for PayPal, those were acquired May 12th, 2023. It hasn't even been a year yet. Every share I have in the public account is all held short term so far. So we haven't even gotten to a year point in time yet, right? So this is a perfect situation of like time, let time play out here, and things should come together, right? The newest shares I bought in regards to PayPal, February 8th, 2024. Time, folks, okay? Listen. Everybody gets so damn impatient nowadays. As an investor, impatience is your enemy. It's your enemy. Patience is your sidekick. Patience is your helper. Patience is there to guide you to where you need to go, okay? It's a long time. Got a long time to let things play out, man. And I understand when I first got in the market, I was a little impatient sometimes because you're new, right? And you're like, you want to start making money and all these things start coming together. Got to let time play out here. And I've been in the market over 15 years, right? Listen to anybody that's been in the stock market a long time or in real estate a long time. We're all going to tell you the same thing. Let time play out because we've all benefited from time, okay? Yeah, it's amazing like how impatient people get, but I understand it. I get it. Palantir's sixth biggest position here. We're up $78,000 and this one up 159%. Now at this point in time in regards to Palantir, in time is starting to pay off here, right? The oldest shares I have in the public count here, I acquired these 888 shares, $7.69 right there. That was on June 17th, 2022. Time is really starting to pay off in regards to Palantir stock. Seventh biggest position in the portfolio, this is where things start to drop off in terms of sizing. Those are my big six. Palantir, Elf, Meta, Tesla, Amazon, PayPal. Those are the big dogs. The smaller guys are now, right? Revolve, seventh biggest position, $48,000 position, 3,000 shares, $9,800. We're up on this stock so far. We'll speak about that a little bit. Cheesecake Factory, the eighth biggest position in the portfolio. This is one I've been adding pretty aggressively last few months. $47,000 position so far, up $4,200. Cheesecake Factory is a very nice dividend payer as well. It's usually a 3% plus yield. Nike, somewhat newer stock to the portfolio, ninth biggest position here, $34,000, 322 shares in regards to Nike. By the way, I hope you guys know what these companies do. Yeah, it Revolve's a e-commerce company, really focused on clothing, much more in the women's space. Cheesecake Factory, restaurants, Nike, footwear, plus other clothing, athletic-related clothes. Fubo's a 10th biggest position in the portfolio. We'll speak about Fubo in just a moment. 15,000 shares here. Sounds like a crazy amount, but it's only $26,000 worth of shares. That went down 30%. That's a tougher position. Planet's a position I've been in for quite a while. Time has not paid off in regards to this one. It's down 65%. It's been a very tough stock. We'll speak about that in just a moment. That's my 11th biggest position. 12th biggest position is my insurance. I have Chipotle put options here. These ones expire January 2025. And my other insurance is Toll Brothers. Those ones expire January 2025, $75 puts there in regards to Tolly Moly. Now, real quick before we get into what stocks I'm planning on buying, selling, holding, why, those sorts of things, let me just say this about the hedges. First and foremost, right? Whenever I go to hedge, first off, mentally, it's money I think I'm throwing away. No different than health insurance, car insurance, homeowners insurance, all those sorts of things, right? The idea is you're going to throw your money away likely, and that's fine. But if things go really south, it's there to save your butt, right? That's the way I look at hedges. So whenever I go to do hedges, I'm trying to do them on specific stocks that I know will get likely obliterated if the market gets hit hard, right? Because being so net long, I need to protect myself in case there's major downside in the market, right? So let's say there's a situation where the S&P 500 falls 20, 25% or something like that, right? Big fall. Well, in that sort of situation, stocks that will get absolutely wrecked in that market will be stocks like Chipotle that have a much higher valuation, right? Or stocks like a Toll Brothers that's a home builder. We know like if the market tanks, those cyclical type stocks get hit hard. And so those are the type of stocks. I mean, you can even look at the home builders, even in the 2022 crash. Those companies report, record earnings and phenomenal numbers, and still look at what happened to their stock prices. All got hit heavily, despite having record earnings during that time. So that's what I'm looking at whenever I go to hedge my portfolios overall, and just a little food for thought there, okay? Now, here's a portfolio in total. Meta makes up 42% of the portfolio. That's not ideal. I understand. It's not what I really want, but the stock's up $658,000. We're up about 300% on that stock, so it is what it is, right? Tesla makes up 15.6% of the portfolio. Elf on a Shelf makes up about 9%. Amazon makes up 8.8%. PayPal's 8.8%. Palantir 6%. And then this is where you get to really small positions. 2% for Revolve and Cake. A little less than 2% for Nike. A little over 1% for Fubo. Planet's a little over 1%. And then my hedges are really small. I do need to add more to my hedges because I need to get this portfolio to at least 1% hedged. I do not like being less than 1% hedged. That's not ideal for me overall. I want to have this portfolio pretty much always at least 1 percentage point hedged, okay? So overall, the thing you got to understand is the safer the stock, the more likely the bigger the position is, right? So these sorts of positions I look at as pretty safe companies. Doesn't mean they won't get hit in a market crash, because all stocks get hit in a market crash, right? But these type of companies can weather many storms, right? And then the more speculative the stock, the smaller it is, right? So you look at like my hedges, super small, Planet, super small, Fubo, super small. But those are those type of opportunities, like they're 10x type opportunities, right? If a Fubo pulls it off, like that's a 10x plus opportunity, right? If Planet pulls it off, it's a 10x plus opportunity. But, there's big question marks with those sorts of companies. So that's something to keep in mind there. Now, what stocks am I looking to buy versus not buy, and why? Well, Meta, I'm not looking to buy Meta. But ask me this question. Is Meta stock a buy right now? The answer is yes, that's a flippin' flapjack and absolutely. Meta stock is a buy right now. Meta's probably on its way to 550, 575 here in the short term. Meta's absolutely a buy. That being said, I'm not buying it. And the reason I'm not buying it, it's already a ridiculously massive overweight position in the portfolio. And I also don't view Meta as the best place to put money at this point in time. I still think it's easy money, but with that being said, it's not the best money. There's other stocks I think are better, more interesting opportunities. And once again, I can't even consider buying that one because it's already over 42% of the portfolio. And keep in mind that 42% could go higher in the short term. I just told you that I think Meta's probably going to 550 to 575 short term, right? Short term is in less than 12 months. So if that happens, guess what? Meta's might be going to 45% of the portfolio, 44% or something like that. Tesla, not looking to buy Tesla. And the reason being is, once again, this is too far overweight as well. It's already 15% plus of the portfolio. Think about it. If Meta goes on another run, to 400, and then they get those numbers start going again, in the margins start going up in the back half of the year, and that starts going on another big run, the weighting of Tesla is going to become much, much bigger overall. So, not really looking to buy any more Tesla right now. Elf on a Shelf, not looking to buy more Elf on a Shelf, and the reason I'm not looking to buy more Elf on a Shelf is I'm just confused. I just don't know. Every time I keep thinking like this has to be kind of the top for Elf's numbers, they blow it away, and I'm like, how do they keep doing this? And I'm still at that place with Elf where I'm just like, can they really keep growing this business the way they're growing this business? And I just have doubts, but I shouldn't have doubts, and so it's just a very conflicting situation in regards to Elf. So overall, I can't buy it. But do I want to sell an Elf? No. It would be a horrible decision for me to sell my last 1,000 shares of Elf. I regret every share I ever sold in the stock, and it always outperforms and always does better than I expect. And to sell a stock when they always are doing better and better than you expect, and you have to doubt them because you're just like, this just seems too good to be true, right? It's a pretty good situation. So I can't cash those 1,000 Elf shares. I got to hold those, baby. Amazon, looking to add some more Amazon, yes. I would love to buy some more Amazon shares. I really want to get Amazon to like 10% of the portfolio. That's always kind of been a little bit of in the back of my mind, goal in regards to Amazon, and get it to 10% of the portfolio. So Yeah, I wouldn't mind buying Amazon. Amazon always is a buy. It's a very simple stock. It's always a buy. It's never not a buy. Same thing with Meta. Meta and Amazon, they're always buys. There's someday Amazon might finally not be a buy anymore, and someday Meta might not finally be a buy anymore, but pretty much throughout all of eternity, those are stocks you can buy. PayPal absolutely is still a buy at this point in time. I would love to get that one at 10% of the portfolio overall. So, yeah, I like to add a little bit more PayPal there. Palantir, no. Why no more Palantir? So, no more Palantir because when I look at Palantir, I don't look at them quite in the same sentence as I would in Amazon or Meta or some of those sorts of companies, right? It has a potential to get there over the next 2 to 3 years, but they're not quite there yet. And the 70% commercial growth rate is very exciting, but I want to see that continue to play out, right? I want to see them continue that. Like, I want to make sure that wasn't just some one-off. Like, oh, maybe, it was just some one-off and we're really excited and then it goes away or something, right? So I want to make sure this AIP thing is as big as I think it is. So for right now, it's just a hold for me. Is it a sell? Absolutely not. I can't even consider selling Palantir stock. But with that being said, I can't really buy anymore. It's already 6% plus of the portfolio. I feel pretty good where I'm at, and I really want to see how these numbers come in over this next bit of time. Revolve is also not a buy for me. And it's tough because their business has been in a little bit of a tough place, but I'm just trying to see, is Revolve blaming it on kind of macro, or is there something wrong with the business model? So that's what I'm trying to see right now. They got a phenomenal balance sheet, and the management team's done a heck of a job over the years. So for right now, it's just a hold. I'm kind of just waiting to see what happens in the business model. And if there's something broken in the business model, or it really just was macroeconomic related things that kind of, the inflation that hurt them over the last year or two. Cheesecake Factory absolutely is a buy. Very impressed with their numbers, kind of the trend that's going on there, the way they're running the business, the growth profile for this company. So yes, I'm looking to buy more cheesecake, 100%. Yep, I would love to get that to a 5 to 10% type position sizing in this portfolio. So I could, cake's another one of those. I could add that one for years to go in the future. Nike, another easy buy for me here. I really like Nike. I would love to add more Nike shares. Anything under 120 is kind of buy target for me in regards to Nike. So I'm hoping they don't report some blistering earnings when they report. I think they report in March, if I recall. I think they're going to report their earnings in March. So I'm hoping Nike to, let's just call it mundane numbers, mundane reaction from the stock price, and it's just kind of chilling. That's my hope, because I would like to build Nike a lot bigger. Fubo, yes, that's still a buy. It's a speculative stock. It's a speculative buy. Can I add a ton of Fubo? No. A position like that, maybe take it up to 2%, but that's about it. But yeah, Fubo, I still like Fubo. I understand there's a lot going on with the whole suit. They're going after Disney and Warner Brothers, and we'll see how all that plays out. A lot of people want to know, well, what's the situation in regards to, are they going to have a lot of legal fees? I'm sure they're going to have some level of legal fees, but I also think there's a potential a law firm could be picking up some of it. Maybe they think there's a really strong case for Fubo here, and maybe they're going to want a much bigger percentage of the potential win there than, let's call it Fubo would usually be willing to give if you're going to go all out of pocket for something like that. So I don't know. We'll see how all that plays out. Their earnings comes up here in the next, I think it's coming up next week, if I recall, or sometime very, very soon in regards to Fubo. The Planet, this question mark right now, I wouldn't mind buying the Planet and adding some more shares, but that's another one I'm trying to see, what is going on there. The Florida business, they've added a lot of complexity to the business the last couple of years. The Florida opportunity really starts to come to fruition this year, but I really want to see, is this a revenue opportunity, or is this a profit opportunity? Because there's a difference, right? And I'm trying to, obviously they're going to be doing business in Florida. They should be putting up nice numbers, but is it helping the bottom line, or is it something that's eating into the bottom line and causing them to lose a bunch of money? That's something I'm trying to judge in regards to the Planet. The CMG put, looking to add potentially more of that one. And then Toll Brothers puts, looking to potentially add that one. I might not buy the same strike price, but looking to add to some more of those overall, and I need to do that pretty soon here, okay?